Tesla stock keeps climbing higher and higher. If you're a Tesla stockholder or are considering buying some, you're going to want to watch this full video, as well as answer all your questions like, is this the start of another bull run? Should I sell my Tesla stock or hold out? Find out in today's video. Hello everyone, you're watching Trade Daily. Like and subscribe to get all the latest news on Tesla and Tesla stocks. Now let's get into the news. We'll start this off by looking at Tesla's stock price. Today, a share of Tesla stock is trading at $209 per share, up 4.21% at the time of recording. In today's first news story, Tesla makes more money than Ford and GM combined. 10 years ago, Tesla was just a dwarf in the automotive industry. The ambitions of Elon Musk's group to transform the automotive industry into a less polluting sector were met with ridicule. Tesla wasn't even producing a vehicle for the masses. In contrast, the heart of the U.S. automobile industry was still beating in Michigan, specifically in Detroit, where General Motors is based, and in Dearborn, the headquarters of Ford. General Motors have recovered well from its 2009 bankruptcy and once again dominated the U.S. auto industry. Ford, the only member of Detroit's Big Three not to file for Chapter 11 bankruptcy during the 2008 financial crisis, was firmly in second place. The picture at the end of 2012 was clear. GM and Ford had an iron grip on the industry. The figures confirm this. Consumers flocked to their cars. General Motors' revenue was $152.3 billion, while Ford's was $133.6 billion. Tesla earned $12.6 billion in 2022. Tesla, which had started production of the Model S luxury sedan a few months earlier, in June 2012, had reported revenue of $413 million. The company was losing money. In 2012, Tesla, whose headquarters was still in California, had recorded a net loss of $396 million. On the other hand, GM and Ford were highly profitable, posting net income of $4.9 billion and $5.7 billion, respectively. 10 years later, the situation is much different. The one that 10 years ago was last has become the winner, speeding past its two rivals. Indeed, Tesla's rise has been exceptional. The company now markets 5 vehicles: the entry-level Model 3 sedan, the Model S luxury sedan, the Model Y SUV/crossover, and the Model X luxury SUV/crossover, and finally, the Tesla Semi. And in a few months, a long-awaited and much-anticipated vehicle will join the list: the Cybertruck, Tesla's first pickup. It is expected to become the locomotive of Tesla's profits in the coming years. What's more, electric vehicles have established themselves as the future of the automobile. GM and Ford and all the other legacy car makers are now investing billions of dollars to develop EV. The goal is to reduce the gap with Tesla, their main target. Basically, Tesla, the hunter yesterday, has become the hunted today. The changing of the guard is reflected in the numbers and especially in profitability. Tesla has become the most profitable American automobile group. In 2022, Musk's firm earned $12.6 billion. Its revenue jumped to $81.5 billion. How times have changed. Musk, the company, boasts profit margins that are the envy of any car manufacturer. The automotive gross margin widened to 28.5%. GM, for its part, posted net income of $9.9 billion on revenue of $157 billion for the year. Ford was in the red last year, posting a net loss of $2 billion on revenue of $158.1 billion. The margins of the two former giants are thin compared with their disruptor Tesla. Ford has an adjusted margin before interest and taxes of 6.6%, while GM says its adjusted EBIT margin in North America was 10.1% in 2022. Their costs are huge compared to those of Tesla. Ford's total costs rose 15% last year, while GM rose 24.4%. Tesla's operating expenses edged up 1.6%. This big shift in the top tier of the U.S. auto industry was observed by the investor Charlie Billow on Twitter on Feb 6. He posted a chart showing Tesla's rise compared to GM and Ford. 2 days later, Musk used it to indicate that Tesla was now America's premier auto center. Tesla Inc. shares extended their breakneck rally on Thursday to double from the lows touched in early January, helped by a rising appetite for growth and technology stocks and signs that demand for its electric vehicles is rebounding. The shares jumped as much as 6.3% to $214 in New York, capping a 110% gain from their Jan 6 intraday trough. The shares are bouncing off a 65% plunge in 2022. Riskier growth stocks, which were beaten down hard last year amid concerns about rising interest rates and a recession, have made a strong comeback in 2023 as optimism about the economy has returned and investors bet the Federal Reserve's aggressive rate hike cycle is nearing its end. At the same time, Tesla's own earnings last month and a spate of positive headlines on tax credits for electric vehicles have provided further lift to the shares of the Elon Musk-led company. Tesla is rising so fast because of a market that believes the Fed is coming to the rescue, said Eric Schiffer, chief executive officer of Los Angeles-based private equity firm Patriarch Organization. Good fourth-quarter results and price cuts to turbocharge demand also helped, he said. Early in February, the Biden administration said it will expand the newly revamped electric vehicle tax credit to allow SUV costing up to $80,000 to receive those credits. That move is a positive for Tesla, analysts said. Separately, the company has seen a surge in demand for its cars after January's big price cut, allowing it to institute a slight price hike. Still, Tesla's gains of 71% this year far outpaced those of the Nasdaq 100 index, which is up 15%, as well as that of the NYSE FANG Plus index, which has advanced 30% in 2023. A frenzy of speculative trading in recent weeks that has seen retail traders rush into some of their favorite stocks can explain some of that exuberance, given Tesla's popularity among individual shareholders. Tesla has definitely been the main target of retail buying so far this year, said Marco Iacchini, senior vice president of research at Vanda Securities. While retail investors buying the stock is not unusual given Tesla is an ultimate retail favorite, Iacchini said the persistence and magnitude of the flows are surprising. Given that Tesla's sharp decline over the past year brought significant pain to mom-and-pop traders, the recent hunger for the stock could be due to a desire to chase it higher and make up for losses, Iacchini said. Just this week, Tesla alone attracted a 33% share of overall net purchases across all U.S. securities, according to Vanda. The heavy retail flows into the stock are coming ahead of the company's investor day on March 1, where Musk is expected to unveil a third version of his master plan, Vanda analysts noted. Despite January's gravity-defying rally, the EV maker's shares are still down about 48% from the all-time high of $409.97 touched in early November 2021. And while some investors say that the worst could be over for Tesla, others advocate caution, especially with the risk of a recession still hovering and the EV industry's brisk pace of growth expected to slow in the near term. Meanwhile, skepticism about the company's newest model, the semi-heavy-duty truck, are continuing to linger. The stock is now trading just above the average analyst price target tracked by Bloomberg, suggesting Wall Street doesn't see much more upside. Meanwhile, Tesla's Relative Strength Index, a technical gauge that measures whether a stock is under or overbought, shows signs of excessive buying, typically seen by markets as an indication that a decline is imminent. Tesla shares can continue to rise until the end of the first quarter or early second quarter, when signs of a potential hard landing may again slash valuation, Patriarchy's Schiffer said. Tesla shares may have had a rough 2022, but the stock continued its march higher in 2023 today. So far this year, Tesla has rocketed higher by more than 70%. The shares rose another 6.3% this morning before paring some of that gain. As of 1 p.m. Tesla was still trading higher by 5.4%. Today's move comes after CEO Elon Musk announced this week that the company will hold its investor day on March 1, where the company will reveal Tesla's Master Plan 3, presenting the path to a fully sustainable energy future for Earth. The National Transportation Safety Board also said today that the company's advanced driver assistance features were not involved in a fatal collision of a Model S in Texas in April 2021. At the time of the crash, there was speculation that Tesla's autopilot feature may have been engaged since neither of the two occupants was in the driver's seat after the crash. However, the investigation revealed the driver must have been thrown into the back seat as a result of the crash. Excessive speed was determined to be the cause of the accident. Those news items don't explain why Tesla shares have rocketed higher this year, of course. The bounce after a losing 2022 has come as investors have come to believe the company has a sound strategy to hold on to its dominant market share in the electric car market. A series of product price drops had many wondering whether demand for its products was waning as competition increased. But Tesla has now begun to increase some prices again, just as Lucid Group announced it is offering new credits to customers of some versions of its luxury electric sedans that directly compete with Tesla's Model S. While the business seems to be back on track, investors will look forward to hearing what Elon Musk envisions for Tesla's future in a few weeks. Expectations are for updates related to a low-priced, mass-market model and the direction the company's energy segment may be heading. Some investors are getting into the stock ahead of the upcoming investor update. And with that, ladies and gentlemen, we've come to the end of the news. Like and subscribe to stay up to date with all the Tesla news. But just before we go, I'd like to remind you that this video is for news and entertainment only and should not be used as investment advice.